behalf of CrossCheck Media and Biz Talk Today TV, welcome everyone to Buy, Hold, Sell. I am your trader, Todd Schoenberger, and I'm joined by my friend and co-host, Tobin Smith, who is back from his world tour signing autographs for everyone because he is the star of Buy, Hold, Sell.
And by the way, Todd, I am not having a heart attack. The air conditioning has gone out in our freaking house. So I have one eye on you, and I have one eye for that freaking air conditioning dude to pull up, and God Almighty.
Well, everyone appreciates you doing this show from the meat locker, so that's for sure. So that's fantastic, and I'm glad you're on today. But with us today is a very special guest, Jeffrey Hirsch, who is the editor-in-chief of the Stock Traders Almanac, who is also a BTT contributor, who is coming back to Buy, Hold, Sell. Jeff, welcome back to the show.
Good to be with you, fellas.
Sorry, Jeff, I didn't get the notification. I was eating tapas and drinking.
Oh my God, Spain. So much fun, right? Were you in Barcelona?
A little bit, but I hate Barcelona now because it's so crowded. It's ridiculous. We spent 2 days there. Went to a great wedding, probably the best wedding ever for my one of my godchildren, and they had sold some NVIDIA and SMCI to pay for this freaking $100,000 wedding, I guarantee.
That's incredible. I gotta say, I think a lot of people are wondering if they should be selling right now. But Jeff, I gotta go to you on this one because with the Almanac, since you've been on Buy, Hold, Sell, the Almanac has been spot on. I mean, I'm sure there's a correlation to being on our show and how everything's working out for the Almanac. But so far this year, it's been a few months since you've been on the show. Mm-hmm. Is the Almanac still holding up as we approach the third quarter of 2024?
It is still holding up, and you know the 4-year cycle, the seasonal cycles, they've really been firing since COVID, pretty much. It has over the years, but it's really been on point since COVID. I mean, we had our Santa Claus rally bet a few years ago, which was just sort of emblematic of how things are working, but it's holding up. But I just updated my seasonal charts, you know, with the sitting presidents and all election years and my aggregate cycle. And while it is holding up, this year is so far above all of the different historical pattern concoctions that I can put together. Is there a reversion to the mean waiting for us? I mean, I'm not bearish at all. I'm bullish for the year, but you got to think that with some of the stuff and with the NVIDIA sell-off, with the Fed looking like it's going to make a move, and this debate coming up, which I'm a little frightened for our country to see these, if I use a little Yiddish, these two alta cockers getting up there, in front of the world.
Ladies at home, ladies and gentlemen at home, he meant these two knuckleheads. Go ahead.
Yeah. But it's still on point. Sitting presidents, when I went to put to bed the manuscript for the 2025, which I just did 2 weeks ago before I went out to see the Dead in Vegas, I initially come into a post-election year concerned. The year after the election has old history been touchy, but recent history, it's not been so bad. And when you have a sitting president running, you have somebody who gets reelected, it's even better. And we have the potential. The odds are one of two guys is going to be doing their 5th year of a presidency. So that's a new chart in the upcoming Almanac, and it sort of began to drive my outlook a little more positive than I initially thought it was going to be. So everyone started to get concerned about the market, but the fact that we have more uncertainty removed from the market because the market, Wall Street, knows both of the two individuals that are possibly going to be in the White House. We've already had 4 years with both of them. So the uncertainty factor is lower, which means the market is going to be higher.
Jeffrey, I was taught for essentially a century ago that it's not the sell in May and go away issue, but that there is summer, just lower volume. You'll have more volatility for just because there's not as many people trading. And do you have any summer, for instance, I know hedge funds that literally close most of their stuff going into the end of June. Now they're going into cash 5%, and then they start fired up the last part of September, first part of October. Are they knuckleheads?
We have a page in the Almanac, Toby.
I knew that. I'm a
It
straight
says
man.
that's exactly what
I'm
you're
just a
talking
setup
about.
man for you guy now, Hirsch. That's what I'm doing.
It's the volume goes down, and we all do other things. Not just it's part of the reason why the volume goes down.
Yeah.
I mean, I'm going to be playing more golf. I'm going to be going away with my family a little bit more. Everyone's going to be doing other things because there's more daylight. There's less reason to be sitting inside doing things, and it just really reflects itself. You got hedge funds closing down, or at least going to cash while people go on vacation, and then you see them come back into September. I call it back to school, back to work, and they clean house and adjust portfolios, window dressing, and that's where you have that end of Q3, that September quad witching week, which is negative, and it sets up the October phobia, which is also when you have that mutual fund October 31st deadline where they got to reconcile their accounting and get their stuff together for the upcoming year. The current year's 10 months, the last year's 10, and then the 12 months. And that's what creates this sort of vortex of volatility and great buying opportunities. We had 2 October lows in a row. 22 was the bear market bottom, and 23 was like October 27th. I mean, I think we were on right around there.
Yeah, we were. I know you called it. I'm sure I called it. So that's really, I don't care about Todd. But yeah, I mean, we actually had a variety of technicians on too that had called it. JT out of New York, right, or JP. I mean, it was sort of a glaring bottom. I mean, it was like a classic high volume. Then selling quit. Everybody who had to sell had sold, and all of a sudden, we've been into November and off to the races.
Yeah, there was a sentiment issue there too. Go ahead, Todd.
So I want to go back to something you said prior to answering that first question, talking about the political environment. You're right. There is the certainty, or the uncertainty factor is pulled away, but you still almost have that feeling of what does happen next, because Biden, and don't forget with Trump, and they are old, but then you have to start thinking about VP candidates. You have to start thinking about what's the cabinet going to look like. What are their policies going to be? I mean, you already have a little bit of a shift going on with Biden, but Trump's talking about all kinds of things. No tax on tips. Who knows what else is out there? I'm sure there's going to be a few surprises as we get into November. Do you need to adjust the Almanac in the event that things do change? Maybe Biden does step away before November. I mean, will you have to have some type of I'm going to say an amended version out there?
Yeah, I mean, you can't really amend the cycles. If something like that, these unexpected things happen, then that throws a wrench in the system, and you got to adjust it. That's not, going to be a presidential cycle or a seasonal cycle type behavior or type action. That's going to be something totally new. I mean, you're going to see if something happens to Biden, the market's probably going to drop, and then you buy you back the truck up right there. So, I mean, that's just old school market, observations. That's not political cycle stuff, because nobody's in their right mind, or nobody in Wall Street is making their calculations based upon what happens if something happens to Biden and then we're dealing with the vice president. That's just the fringe, nuts on the internet talking crazy.
Yeah.
And what Trump's doing with the cabinet, we've seen what he did there before. He had Scaramucci was in there for 11 days, and nice guy. I mean, Tony's a good people. I mean, I don't know. He's smart. Like, why would you screw around with it? So people know what they're going to be dealing with. I think it was even one of the quotes. It might have been Jamie Dimon, one of the big Wall Street CEOs, was like, "We know how to adjust with either one of these guys. Whoever it is, we'll adjust accordingly."
Right.
And that's why the markets can't deliver it above any pattern I can look at. It's like, I mean, it's at the year-end gains that I forecasted 15 to 20%. It's there already.
Right. Right.
Well, but Tom, Todd, what I've been advising people is 3 things. And number one is, if you lived through 1998 through 2000, and I ran a mutual fund that I didn't really read all the rules for their 2,500-page rule book about concentration, and I had JDS Uniphase, Cisco, Dell, AOL, BlackBerry, the top 6. I'm just looking back at the old records.
You need 5 positions. That's it.
Yeah, that's all you needed. So that's all I did. And then I kept about 20% cash. Well, the rule was, no, you can't have 20% of cash. You only have 1% cash. And you can't have more, blah, blah, blah. My point is, if you actually understand how people manage money for a living, they have no choice because they lose their job if they don't stay within certain parameters of what the big indexes are doing. And it's been so freaking easy. Stevie Wonder could be right. Matter of fact, I'm going to start the Stevie Wonder Fund. It's just Microsoft, Qualcomm, there's 12 stocks. Now, as long as those stocks keep working, they're now 47% of the entire freaking S&P 500.
Is it up to, wait. Is it up to 47 now?
It's up to 47%.
Amazing.
So, hey, man, just take the top 10, own those,
Right.
sell put options, generate some income, and you're going to be up 40% this year, which is 40 years of the average return. I mean, if you're up 400%, that's 40 years, right? We have some, we have stocks here. Jeff has stocks up 400%. If you haven't taken profits from those and got all your money back and then got another 100% back, you are a bonehead, and you deserve to have that money go to money heaven because you're
the oldest rule for us that I learned from my father when I started picking stocks with him was always sell half on a double. Okay?
Absolutely.
We just sold another half of Super Micro.
Yeah. And we're deploying it into the other side of what we do, which is very high monthly income. Because now if somebody's got a Roth, particularly a Roth, I would just send a note out to our subscribers. On a $500,000 Roth account, we're generating about $8,000 a month in dividends. So you made all this stupid money for the first 6 months. I'm taking half of that and putting it into high dividend stuff.
Sure.
And going to generate a 20 or 22% return and reinvest those dividends. That's it. I'll still have risk. But when you can get the type of yields you can get today, to just sit there and go, I'm going YOMO FOMO, baby, YOMO FOMO.
Yeah.
You deserve what you get. Sorry. You deserve what you get.
I think it's YOLO FOMO.
Yeah, I know, YOLO.
Jeff, I know you. Well, before we go to the break, I want to ask you, because I know that you just finalized the 2025 Almanac. What do you have in the Almanac as it pertains to monetary policy changes?
Well, considering that's not a cycle, I have that in the newsletter. That's not something that's really in the book about monetary policy changes. I've been in the camp since late last year of, a few at most cuts. I'm looking at one. I was on with Charles Payne a couple of months ago. And he's like, so 2 cuts? I'm like, 1, maybe 2. And now one before the election is maybe 50-50 in my book. After, a little more likely. The Fed does not do anything major until there's a crisis. There's no crisis. Okay, so we got a little softer GDP. Yeah, there's some people in the middle of the country whose prices are a little high for certain things, but things have stopped going up. Things are, your McDonald's, now they're bringing the $5 Happy Meal back or whatever it is. But, the jobs are still being generated. The wages are still going up. The economy's still growing, a little bit slower after the kind of growth we had last year and at the end of the year. Yeah. You could see a little fall back there. So it's not in the book itself, but it's in, the updates, the outlooks I do in the newsletter every month. I'm not expecting anything fast or big from the Fed anytime soon.
Well, Todd, we used to have the saying about the Fed put, right? If the stock market, had problems, they were going to rush in. Well, they're on vacation.
I Hold, Sell, brought to you by CrossCheck Management.
Watch 13 Wham News anywhere on any device with STIRR. Download the STIRR app and choose Rochester. You get local news and more than 20 other TV channels. And the best part? It's free. Go to your app store and download STIRR today.
Welcome back to Buy, Hold, Sell. Well, all the talk of Wall Street about NVIDIA, the sell-off. We saw over $400 billion in market cap erased, and nobody knows what happened, but all we heard was maybe demand is slowing. But we did see the stock pop a little bit today. But Toby, I know that you have a lot of strong feelings about NVIDIA. You have clients calling you nonstop about it. Did they sell when the stock was dropping?
Well, we have subscribers, and then we have money management clients, right? For money management clients, I follow the Yale Hirsch school. When something doubles, you take out your money. And then when it doubles again, you take out your original capital again, for just the obvious reasons that in a 10% market average growth, over the last 20, 30, 40 years, to earn 400% on your money is you got 40 years of growth of wealth for us, 12 stinking months. That does not happen. And I can tell you what happened to Cisco in 2000. I can tell you what happened at JDS Uniphase, Dell, Sun Microsystems. Been there before, seen the movie. If you run your own portfolio, and there's only three things going on here in stock. Number one is getting the macro economy right. Are you a recession or not? Number two is, to me, where there are inflection sectors, where there's growth inflection that has happened because of technology or because of laws or legals or so on and so forth. And then you pick the stocks in there. But then the third part is risk management. And that's the part that the average investor totally screws up, because they're stuck in a deer in the headlights, like right now, where, NVIDIA goes up 247%. That doesn't happen. What happens is, we got the major global inflection of all time, AI. But let me tell you, the earnings number has been going down every quarter for the last 4 quarters. And the growth numbers year over year are great, but quarter to quarter. So we took a lot off. I know Jeff took a lot off. And I just tell people at home, if you're just like, oh, what do I do? Is NVIDIA going to double again from
who's buying it up there is what I want to know.
Yeah, I mean, 440 billion was the largest loss in the history of the stock market in 3 days for one stock. So everything's outside.
Adjust that for inflation, though.
Yeah, that's right.
That's funny. Well, I mean, the AI story is still going to be the hottest story. I mean, when we had Dan Ives on, he was talking about how last year corporations were looking to take 1 to 2% of their revenues and devote it to AI. Now it's well into double digits for 2024, and it's only going to increase. So NVIDIA is definitely not a story that's going to be dying out. I know you bring up one of those companies from the 90s, and that
JDS
Uniphase. Yeah.
I mean, NVIDIA may or may not be, run its course, but AI, NVIDIA may not be the story for the future in AI. I'm not proclaiming to know what is, but I know Toby and myself are always looking for these new stocks. And I look for companies that, you mentioned quarter over quarter earnings growth. One of our main screens for picking new stocks with our seasonal overlay is year over year and sequential quarter over quarter revenue and earnings growth and growth acceleration. So that's what we're looking at when we're trying to pick stocks. And you're not seeing that anymore with NVIDIA. But to me, I equate where AI is right now. I don't know what you want to call it, middle innings or whatever, but it feels a lot like 2 things. The early 90s with Windows, when I was starting with the Almanac and converting all the paperwork from DOS into DOS and then into Excel for Windows. And then, the microprocessor back in the early 80s, is kind of what launched that last secular bull market. And if you guys remember, we've talked about my super boom forecast that I made in 2010 for Dow 38,820. We hit that. And part of that super boom equation is this, what I call a culturally enabling paradigm shifting technology, which AI, I believe, clearly is. And it's only just begun.
Yeah, I would just put it Yale. I just called it Yale.
It's okay.
Jeffrey, I would put this. I mean, anecdotally, I can tell you this. We have a subject matter expert group that we run for transformative research. That's how hopefully we get, early as we got early into the generative AI. But look, I encourage the listeners and viewers to go look up on Google, why is Copilot bad? And look at the comments you get, particularly on Reddit. Copilot, they're charging $30 a month. And in theory, you can ask it any question. It will give you the answer from all the Microsoft data from your company, your enterprise, so on and so forth. But in reality, I used it for 2.5 weeks. And the very scientific terms, keeping you up, Todd, sorry, is POS. It's a piece of you-know-what.
A point of sale thing?
A point of sale, right, exactly. It didn't answer anything I couldn't get, that I can get just on Google search, because now Google search includes their AI capacity. And
you can just ask Alexa.
Yeah, Alexa, I don't answer that question, Toby. Yeah, and they're going to want to start to charge for Alexa now to add, generative AI. My point is, Todd, if presidents of these larger companies have no farking idea about AI, except that if they don't say that their companies are doing great stuff with AI and work on it on their call, their stock's going to go down. So that's why we got 18,000 mentions of AI in the last, quarter, right? But it's companies that have been way ahead of it. What is Apple doing? Apple is going to do a deal with OpenAI to integrate. Why? Because OpenAI has been on this for 8 years. They're way ahead of the market. Google has been on this for 14 years. Excuse me, Robert Hinton, who was on 60 Minutes a few weeks ago. They are way ahead, and that's going to be the beneficiaries, number one. Then number two, the huge data owners, the Metas, the Googles, the Microsofts, that own all this data that they can actually then put into a system, and you can actually ask queries. And there's one company a small company I invest in called Versus, VERS, ticker symbols VRSSF. They just announced this week what they call, or last week, their Genius system, which actually takes information from various places and makes inferences. AI inference, telling you something you don't know, and is the value. And Versus is the only technology that I've seen that, and I'm a shareholder, that has active inference. And they just tested it with a huge logistics company, NRI, all over around the world. The biggest problem in logistics is you've got these people, they call them pickers. Number one, probably not call your employee a picker, but that's another thing. Those are the people that go fill up the order and go back and, and do that for 10 hours a day. They last about 9 months. It takes them about 6 months to learn what the hell they're doing. And then they can't stand it. It's the worst job ever. So with this Versus Genius system, it cut down the time element 50%. The biggest labor in logistics, shockingly, is labor costs. And B, they're actually getting these guys and women to stay because it's actually now sort of fun. It's not just a drudgery, etc. That type of stuff, smart city stuff, that stuff's going to happen. But the idea that you're going to, I talked about a company called Verint, VRNT, that's in the works with insurance companies. They have a bot, a chat bot, that really does answer a question. When you say, when is my auto insurance getting rid of? Hey, what's my price increase going to be? What can I do it'll answer you in real time. You don't need to talk to a person. That's value. So Verint is one of the second derivative stocks that we own because it is a beneficiary, but it actually delivers value. I'll shut up now.
Well, here, Jeff, I have to ask, though. I know you were talking about cycles for the Almanac, but there are cycles with tech. And now we are in that tech-heavy cycle with AI. Is that part of the 2025 Almanac?
I mean, the tech AI cycle is not something that's ever happened before.
Yeah.
But so you can't really have a pattern cycle without a history of it. But it's all part of the super boom pattern. I mean, that's the big cycle. And I put out that book and that forecast in 2010. We've updated that super boom forecast. I'm looking at, instead of Dow 38,820, I'm looking at Dow 62,000 plus. 6240, 430 is the number we have based upon
432. Yeah,
it's I'm Rain Manning on you.
Yeah.
Well, I get the super boom side because you're right. I mean, you had real estate a decade and a half ago. I mean, there's always been something.
Now, this is not that kind of boom cycle. This is an global economic boom cycle based upon a technology that changes the world, like the microprocessor, like,
internet,
combustion engine, the internet. But the internet was part of a bunch of things that came out of the microprocessor. I'm talking about, air conditioning, the steam engine, indoor plumbing, air travel, electricity, stuff that affects everybody individually and the whole planet collectively. Unless you're in some Amazonian tribe and you're not. Well, right. No, but Elon's
you're not buying stocks in, so we don't care. Yeah, they're not buying stocks.
So that's the big tech cycle, is the super boom, which is what we're in. It helps to have a little more, a little better functioning government in the USA, where you have Congress that does things and works with a president to compromise and pass legislation and things that help the country.
Jeff, are you smoking that funny weed again?
Not right now. Not right now.
Yeah, okay.
But if you remember back to, was it 92? Gingrich and Clinton, I think 92, or was it 94 when the midterm year? And then Reagan and Tip O'Neill, maybe, another cycle from now, we'll get some new people in Congress and some new people in the White House.
But I can tell you this, Jeff, what they didn't have back then that we have now is what I wrote a book about tribal hatred media. In other words, we didn't have Fox News. You didn't have MSNBC. And so both tribes get a dopamine hit every time they see someone tell them how much smarter they are.
That's a very important point, my friend. And I agree with you. There's a piece in the Times today about the slang, the youth slang, and it's I am cringe, I think it's a thing, and then the word is based on reality, which is a teenage sort of a new buzzword, because there's so much misinformation that you were just highlighting out there that they talk about. Oh yeah, that's based. That means
that's based. I like that.
So I mean, Riz was the Oxford word of the year 2 years ago, or of 23, which is, I know you know what Riz is, right? You got Riz.
Yeah, we got Riz all right. Well, BTT has Riz, that's for sure. So, so this is great.
So wait, a little quick cycle for you. Just something I just put out on the blog the other day. Christmas in July, the mid-year rally comes off of this quadruple witching week right here, and the week after quadruple witching, which is negative end of June, the mid-year rebalance, the Russell rebalance, and you see this 12-day trading period, last 3 days of June, first 9 of July, a little pop in NASDAQ. We got some first day of July is a pretty solidly bullish day across the board, up like 80+% of the time and decent gains. So while we're having some sell off some tech issues, even though today was positive, there's usually a little rally into mid-July from the end of June, and then we sort of settle into those summer doldrums you spoke about.
Summer doldrums.
We have a page there, and we've been talking about the summer rally for years in the Almanac. Don't buy the hype. It's just something that advisors and brokers and people in the business are trying to do to get people excited about the market, because everyone's out hitting the course, or
right.
But don't buy the hype. But definitely stay tuned to BTT. Jeff, where can the audience find this blog that you keep mentioning?
You go to stocktradersalmanac.com and you click on the word blog in the top menu bar, and you can also track me on Twitter at Almanac Trader, LinkedIn. You can.
I follow you on LinkedIn, Jeff.
Yeah, no, we've done some stuff there. LinkedIn's getting a little bit better. It was a little bit clunky, is that the right word, for a while? But it seems to be a place where people have some serious, information coming out there. But you can just use that Google thing, the Google, and just type in Stock Traders Almanac.
I've heard of the Google. So
the Google.
And one final question. The 2025 Almanac, when's it go to press and when is it available for sale?
It will probably be available early in October. I have delivered the first manuscript to the publisher. We are under promising, over delivering. So we're getting things in earlier, and it could be out a little bit earlier this year. Things are looking good. We tightened up some of the, systems and techniques, the production stuff and designers. So I'm just gonna proof it one more time, really.
That's great. Well, I know it's the 58th edition of the Stock Traders Almanac that's coming up. Truly remarkable, a success story, an American success story. And I know all of Wall Street really appreciate you putting it together.
Off to Yale, man.
Yeah, there you go.
Exactly. Props to Yale.
Absolutely, that's for sure.
Thanks, gents.
So listen,
Go
I
ahead.
know we're going to have you on before it's launched to the public.
Sure.
So we could get further into it, and definitely we got to have you back in the third quarter as a BTT contributor. That's part of the rules. You have to come back every quarter to talk
Rules
about
is
the
rules.
market. Rules are rules. That's right. That's right.
Autographed copy, Hirsch.
There you go.
We gotta get together and have some steak, and I'll bring it signed for you.
Love that. Love that idea. We definitely have to make plans for that. And also for Toby, go to transformityresearch.com for all of his stock picks. He has some great commentary there as well. You definitely don't want to miss it. So on behalf of, go ahead, Toby.
No, it's very easy for you to say keep stumbling. It's just fun to watch.
Well, listen, we're going to leave it there. So on behalf of Jeffrey Hirsch and Tobin Smith, I am Todd Schoenberger. Thank you once again for joining us today on Buy, Hold, Sell. We'll catch you next time. Take care.
Buy, Hold, Sell, brought to you by CrossCheck Management.